But then you hit this point where you want to level up.
To be clear, you don't necessarily have to be an ultra wealthy individual.
AI is perfect for in terms of answering, going deeper, again, not giving you information you don't need.
Hi, Anna. So good to be sitting down with you today. Thank you for joining us.
Thanks so much for having me here. Great to talk with you always, JC.
So we are with Anna Joo Fee, who is the founder and CEO of Goodfin, an incredible company that's carving out a huge opportunity in terms of wealth management, but really using AI as the core platform. Tell us a little bit about how you started this company, what was the genesis behind it, and what that road has been like.
Yeah, happy to. So this is my second fintech startup. My career initially started as a Wall Street litigator. So that's what I did for quite a while before moving to the startup world. So I really came at Goodfin from the customer perspective. So yes, I'm a founder. Yes, I tinkered and ideated a bunch of ideas, but I knew by the time I started Goodfin, I wanted to work on something really personally meaningful. I knew, how tough the journey would be. I knew I would need to be motivated and passionate about it every day for many, many years. And so, money, the topic of financial wellness, of being empowered through wealth, that is, I think it's hard to think of many other subjects that are important. And then I also felt that coming from my legal background, that I had strong founder market fit in terms of the regulatory landscape. But really what motivated me is this desire to fill this gap in the world of financial services for somebody like me. When I was a lawyer, when I was sort of rising up the ranks, at a law firm, I was a high earning professional, and yet I still felt that there was so much I didn't know, so much I could have done better with my money, and really that the world felt very sort of bimodal, and that there are all these pretty sophisticated products and services for high net worth and ultra high net worth folks that have been very hard for anybody not in that world to sort of access or even know it exists. So that's really what Goodfin is about. We're at a very exciting time to build. Again, we are AI native. AI is unlocking a tremendous amount of potential in this domain. And that coupled with some other trends, which we'll talk about, but the growth in private markets, as well as the great wealth transfer, it's really prime time for big new players in this space to better serve the needs of customers like ours.
So historically, access to the private markets has been a challenge. And so Goodfin is aiming to break down those barriers. Maybe you could talk a little bit about that.
Yeah, absolutely. So that is our wedge and the first problem we set out to solve for our target user. So again, going back to my own personal situation, after I graduated law school and got my first job, sort of was earning, a comfortable salary, the first things you do, was like paying back my awful law school loans, of course, building a savings account, and then you start, I think typically for most people, investing in your 401k and index funds and sort of pretty vanilla equities and bonds. And I think that is good advice. And that's generally sort of the latter.
The tried and true.
The tried and true. That's where you start, and you've got to start to build your wealth. But then you hit this point where you want to level up, where you start to learn about other opportunities, and they're generally, again, hard to access. So this might be where we do a lot of our offerings. So in private markets, pre-IPO companies, for example, private funds, whether private equity or venture. But if you, let's say, work in the tech world for a private company or venture-backed company, you probably have some equity in that company, so you understand what that is. But unless you're really an active investor, your eggs are really in that one basket, right? As a founder, my eggs are really in the Goodfin basket, which makes a lot of sense, of course. But for employees and really even for myself and other founders, the ability to diversify, to add other types of private companies or funds to your portfolio is still, very difficult to do unless you have lots of money and you have lots of access. And so that was the first pain point we set out to solve, and where we've seen tremendous traction and growth. And
So if the average person wants to, say, invest in OpenAI or some SpaceX, for example, they couldn't just go out and invest? Is it?
No, because where would you start? And I think for our users, many of them, some of them have some sense and some experience. Some are quite sophisticated, and then some users have really no idea, no experience. And I think that has been a very rewarding part of what we're building, to be somebody's first foray to educate them and sort of teach them and make that experience accessible and easy is really our goal. But that's correct. If you couldn't find the source, you couldn't structure it to sort of get the opportunity to meet the regulatory requirements, to meet the minimums, you wouldn't typically not be able to access that opportunity, right? These are companies worth hundreds of billions of dollars, raising, many, many tens, hundreds of millions. They don't need a $10,000 check from me, right? And so they are taking typically big institutional investments. They're able to raise the strong companies that are sort of household names and very hot right now. They are, very easily raising the money they need in private markets. They don't even need to go public. So that's another factor that is keeping the value creation, I would say, in private markets and hard for retail to access. So if you're not able to reach these private companies, to be able to invest in them, to write a just right size check for you, you're really just not able to participate. And I think in this era now of so much investment in AI, this is going to be even more pronounced, right? Where you see this dichotomy between those who can participate and invest and get returns from private markets versus those who are sitting on the sidelines waiting for them to go public,
Right.
and wondering if and when that will be. We don't know.
So to be clear, you don't necessarily have to be an ultra wealthy individual. You're really just talking about people who are making a really good living and they're interested in the private markets, but historically there were the various barriers that you're mentioning. They can now access coveted investment opportunities through Goodfin.
Exactly. That's very well said. So what we do is we do all the hard work in sourcing these opportunities because they are hard to access. So that's a mix of being in the market, of having those touch points of players in the ecosystem. It is being able to evaluate and diligence deals, get in on rounds when they're happening, and participate with bigger institutional investors. So part of that is the sourcing. And then again, there's the structuring and pooling the checks of smaller investors and enabling that access. So we basically act as much as possible like an institutional investor in order to participate in these institutional quality investment opportunities, but make them available to sort of ordinary individual accredited investors.
Right.
And so the criteria that typically is required is that, and this is a regulatory requirement, it's not set by us, but it's that you're an accredited investor. So that typically means as an individual, you're earning $200,000 a year, or as a household, $300,000, or have a net worth of $1 million. So there are requirements, and we will be sort of further in our roadmap, expanding that access and rolling out many other products. But the sweet spot and where we started was really enabling accredited investors to tap into more of these institutional quality opportunities.
It's really incredible, and as you're talking, it makes me realize that there's this notion of generational wealth.
Yes.
You came from it, you have it, and to get there, if you're on the sidelines, has as we have said, has been prohibitive. What is the notion of a job alone doesn't build wealth mean to you?
Yeah. So that was really the lesson that I feel like I came out of my lawyer career with, right? And has really inspired me to build Goodfin. So certainly having a steady, solid salary is incredibly meaningful, right? That was like goal number one for me, was to get my legal career going. You get the degree and you feel like it's enough where, or I did, and not to generalize, but I certainly felt like, okay, this is just going to kind of work out. And honestly, when I was working 90, 100-hour weeks, sometimes there isn't even time to really think about it. It's not really like having a
Sounds like the
spreadsheet.
law world really prepared you for the world of startup.
100% in so many ways.
Yeah.
And including those, 90, 100-hour work weeks. But yeah, absolutely. I think that the job, again, this is sort of about that ladder, right? And for just for me personally, and again, being an immigrant and sort of working my way up that ladder, I think it was meaningful to hit that rung where I made a six-figure income, where I had the potential to make partner and make more, and really think about, okay, well, what do I want to sort of build in terms of myself, my family, any legacy? But I didn't feel like I had real help in that, or I fully even understood how to think about it, what to anticipate, right? Because those are the questions that are actually really meaningful when you start to make good money. It's not so much like that I want to know how much I spent on coffee last week. I want to think about how much am I going to make here? What's my career progression? How should I think about big milestones in my life, having children, where I live, optimizing taxes, because you're paying a lot of taxes when you're a high income earner. But really, I think, again, like going back to that ladder, the next step is when you start to earn that, how are you allocating those funds and really meeting that plan, living out that plan, and growing your wealth, preserving and growing it. And that, again, from a lot of my user research, if you are a lawyer and you're getting big bonuses, you buy more index funds, or your parents might tell you, why don't you buy a house? But a lot of the people I interviewed would say, but I don't want that, or that doesn't fit my lifestyle. I'm nomadic, I'm too young, So there's a lot of demographic shifts and preferences that are changing. And the world is still very much like, you have to get a human financial planner. You've got to go through all this friction, have a certain AUM to even get in the door. And so there's real disconnect, I think, from helping people build that wealth and sort of think about it holistically.
That's very interesting. Would you say, we've heard that Goodfin is very much about community and the role of community and inclusion. How important is that to the business that you're building, and how does that, present itself?
Yeah, it's key. I don't think I can emphasize it enough, which is interesting because we are a tech company and we are an AI company. But from the beginning, I would say the two core components of our DNA was really around the tech, because that's what's going to unlock the ability to productize this, the ability to scale it, and that is, of course, essential, building in 2025 as a startup. But second, this community of our users have from the beginning asked to connect with each other, to meet. We host, a bunch of events all the time. We're actually going to ramp that up and double down, because that's a meaningful value add to our users and very synergistic with our business, right? It's where they are seeing other people who are also investing in these private markets. It's where they're sharing insights, opportunities. It helps our own deal flow. And so, and this is very common to the world of private investing. For the people who are in it, they get it. They're already doing it, right? They're already now, that's how they're getting access to these things. But for many of our users who are the lawyers or who are busy, who are not deep in Silicon Valley or in whatever asset class that they're privately off-market investing in, this is a way to start to meet other people, connect, and learn. And that in and of itself is valuable, sort of regardless of even if you are investing yet or not putting that much in
But
it.
it can find people to connect to, ask questions.
Totally. It's
get comfortable
actually
with
a
it.
really important part.
Can you tell us about some of the opportunities that Goodfin gives you
Yes.
access to? You know, not to get
Yes.
into the weeds too much, but maybe take us through a few scenarios and potential companies even.
Absolutely. So we are focused on the private markets and primarily in pre-IPO companies, in venture funds and private equity funds. Now, within that, so by pre-IPO companies, it might be a misnomer in some sense, but it really just means sort of growth and very large private companies. So, SpaceX now is like $350 billion worth. These are like enormously valuable, some of the world's most valuable companies. But again, you can't go on the New York Stock Exchange and invest in them. You can't go on NASDAQ and invest in them. And so we have a lot of demand for, I would say, like the top 10 to 20 names in sort of the growth pre-IPO bucket. And a lot of activity happens there. And that's ranging from individuals who are writing really small checks all the way to, very large, sophisticated family offices that are also looking to make investments in those names. Second, we have funds. So these are portfolios. So it's not single company, but really funds in earlier stage companies. And that's where greater diversification and numbers makes more sense if you're building out a portfolio. We are Y Combinator alum. So our focus has been on other Y Combinator companies. So it's like, I think the strongest potential for outlier returns for really baby startups, right? But that's an exciting bucket for a lot of our users. And then the third are more classic buyout or growth private equity funds, and led by really like top quartile or really more than quartile managers, because you see such significant return dispersion. You really, at the fund level, are looking for the best managers who have a great track record, who are really great at what they do. If you're investing in general, that is, what we recommend and seek to offer.
I want to get into the AI, but before I do that,
Yeah.
I want to just hear a little bit about maybe the more traditional minded investor, whether they're a 20 something high earner or 50, 60 something, who say, I just feel more comfortable with a traditional wealth advisor. What is what kind of pushback do you get, and how do you handle that?
Yeah. Good question. I will say that, look, we're not going to be everything to everyone. I am building some version, of course, of what I want. And I always prefer a tech solution first. And we have many, many users. And I think there's many folks out there, I would guess the majority, who do seek something easy, sort of that already fits their lifestyle. So we default to tech in almost everything we do these days. So the idea of trying to find a human by referral through friends, which is typically how advisor referrals are happening, and then to call and set up meetings with a bunch of them, really, I think where the human advisor shines is selling that human relationship. I would say that's really what they sell. And that can be valuable, of course. And I think if that's sort of the primary value. It totally makes sense. And for some people, it will. The interesting thing and the insight that we have gleaned and what really we're building our business on is that the product, the advice, and the trust even can come from tech. And there's a lot of benefits to that as well. And the interesting thing, like you would think that the human is always more trusted. And certainly, I think when you do have a great relationship and you do get to know each other well, that trust is there and it can be very valuable. But you'd be surprised at how much tech is trusted. And it can be, if done right, if done credibly and responsibly, it is viewed as really, objective, a little more transparent, and it's available 24/7. It's private.
Would you say
Right.
that it's generational specific? Because obviously certain generations have grown up. It's just, it's instinctive. It's a part of who they are from day one. Some of us were using word processors in college. And, there's folks that are investing probably on your platform that never even heard of a word processor. Don't mean to date myself. But tell me a little bit about why it was so important to build this AI native platform. And one of the things that, we've seen is that AI has been around in wealth management for a long time. It started with robo-advisors in the 2010s and up. We saw the advent of a whole, bunch of companies using that even to this day. But in the last couple of years, AI has really just kind of accelerated. What was the jump off point for you, and how are you staying ahead of it?
I love this, and there's a lot of to unpack there. So I'll try to hit them all. But so I do think we've had, what was more of the legacy AI or traditional AI, primarily around machine learning, that a lot of the financial industry has been deep in for a long time. And I think with robo-advising, a lot of automated portfolio management, that has been great. It's now everywhere. I remember when, Betterment was first out with that, and it was such a big deal, and it is a big deal. But what you're seeing now is sort of a new wave of innovation that goes beyond that, heavily based on generative AI and the kind of technology that I would say most mainstream folks use with ChatGPT, for example. So you're able to unlock unstructured data. So imagine the experience I described where you're calling the advisor or the advisor's calling you and you're having that conversation. Like, who are you, JC? How do you sleep at night? What are your goals? Where are you in life? You need to have a conversation. I need to know about you. I need to have data about you. And not all of it fits into like a budgeting calculator, right? Like most of it is not. That's the kind of data that now AI can unlock and have that conversation with you. It could even do it by voice, right? Voice is getting super powerful these days and fast. And so now you can start to mimic these human-like advisor experiences, and they can also be tailored and contextualized to each user.
Oh, wow.
And so the way it should go is that the AI, as it's onboarding you, is going to have a different flow and conversation than it will with me, because it is able to be fluid. And again, like, that was just not possible before,
and
right?
It's storing my conversations.
Yes, that is what we do.
So I can come back at a later time and, hey, JC, you talked about this on our last discussion.
Exactly. So having that context around you, getting to know you more and more over time, obviously with your consent, and this data is not, we do not share it with anyone, but it is used exactly for that purpose. And that is what you want in that advisor-like experience, right? So that's important. And the other thing I'll say is that, where ChatGPT has like been so bold and transformative, I would say, is that like they just let the consumers in, right? Like they had the technology, and Google pioneered it, as well, or perhaps earlier, but there was a decision made to kind of unleash it to the consumer. And
you mean democratizing free, accessible, right?
But like now any one of us can use it. I use it every day. And I think that has really changed the way we'll develop and use this technology, right? Because it isn't just going to be a B2B product just for enterprise, just for enhancing this workflow or that. It is that our users, it's not just on Goodfin they're using AI. They're using AI elsewhere in their lives, sometimes every day. And this is only the beginning, right? The usage is only going to grow. And so as that becomes normalized for the consumer, for the user, and they kind of expect that, they develop those behaviors, it will translate to money. If it, isn't already. We have users, the majority of which are using our AI as they're investing. That's already happening. That percentage is only going to increase.
Right.
And so I think this is a huge shift, not just in the technology, but really in how consumers will use it and their own behaviors. And that has ramifications for, I would say, broadly, almost everything, but certainly with money management and client advisor relationships.
I wanted to ask you a little bit about that. So obviously you've created access to people who aren't necessarily, billionaires. They're just high earners. But I would imagine to scale the business, you do need some of those big fish.
Yes.
And a lot of those big fish are probably locked in with, the traditional investing model. Have you seen people coming over, not saying they're necessarily abandoning their traditional wealth advisor, but is that happening? And what is the experience with that?
Yes. So that is what is really fascinating for us and has also been a big growth channel. When I started Goodfin, I was like, oh, I'm going to go after, me, a version of myself. So I, first generation in the US, moving up that rung. I high earner, but of course I don't have access to invest in some hot Silicon Valley company. The interesting thing is there are many well-capitalized entities and investors that also lack access. Of course, they have more access than I do, but it depends on what you're talking about. You can have a family office that has built their money off of real estate or off of construction or, and these family offices, might have, 9 figures in sort of wealth and investment sort of arms and professionals there. But that doesn't necessarily mean they have access to invest in a particular private company. And so what we have gotten inbound on is, since we do offer access, it is to a different type of customer, but we have access to these opportunities. We're in the market. So it has become kind of a natural extension for, yes, us to work with bigger check writers as well.
Do you think at some point you might partner with the bigger banks and traditional?
Oh, and we already are. So again, initially it was more about co-investing. It's about deal flow. It will always be in large part about that, right? Again, we try to act as much like an institutional investor as possible so that we can participate in these deals, and we are a good partner to these managers and companies.
But I'm talking even on the technology front, because we know the big banks, they're not nimble.
Yeah.
They like to say they have their finger in the AI or fintech pot, but it's a slow moving process. I would think a Goodfin would be an incredible partner.
Yes. And we are having those conversations. And again, when we built, we started off consumer, and that's our origin story because, again, I'm coming at this as a customer. I don't come from the industry. I'm building what I want as a consumer, and we've always stayed true to that, despite temptations to sort of serve business clients sooner. But now, that we are bigger, now that we've built more ourselves and we are so close to the end user, we know what can benefit other players that serve the same customer, right? It's basically the same type of technology, but built, of course, for them. And we've always designed our technology in a way where we can, turn them into APIs, where we can white label it, where we can serve the RIAs and potentially banks and other.
Right. Can you take us through some of the, just staying on the tech and the product side, what are some of the AI features that you have or you're in the process of rolling out?
Yeah.
And what can we expect in maybe 12 months?
Yes, yes.
Because
so many
the name of the
exciting
game
things.
is it's so fast.
Oh my goodness, we're shipping every day.
And we heard that you have an incredible AI team, the word on the street. So I have no doubt that you guys are staying ahead of it, but just take us through a little bit of where you are.
Props to Shilpi Nayak, our co-founder and CTO, incredible. And look, on the AI, the goal again is to kind of mimic, reimagine as needed, but really like give that end-to-end investor experience right now in private markets. Again, that's our wedge. That product is selling. Now, every legacy market has sold without AI, right? Like this is now being sort of reimagined, I would say, but also just made tremendously more efficient. And that's like the big unlock with AI, right? So we talked about onboarding. From the very first touch point you have with Goodfin, it is AI led, right? So we want you to view Goodfin, again, we don't call it an advisor, we're not a financial advisor, we're a tech company, but the experience should be guided and personalized for you, where we're saying, hello, JC, welcome to Goodfin, what brings you here? We gather sort of data about you, what you're looking for, what your portfolio is. But the purpose of that really is so that we have that information to then make suggestions. I'm not going to call them recommendations, but really suggestions and help guide you through the investment process. Onboarding, even though that's the first piece of the customer experience, is actually not the first thing we built. We first built around the investment products themselves. That made the most sense, right? It's like, we're offering you this investment opportunity.
That's the core.
That's the core. And, when I started Goodfin, it would be that like I would get on a Zoom, many, many times a day and answer the same questions over and over again, right? It's like, how'd you source this? How's it structured? What are the fees? What happens if it IPOs? What happens if it doesn't? There's a set of questions that really AI is perfect for in terms of answering, going deeper, again, not giving you information you don't need, but going deeper where you would like, right? And you're still always able to set up a call with me, and we have our links there to speak human.
I was just going to ask you, is there a combination where the human touch still is available and plays a role?
Of course. And that will always be, but it really varies, and it's very, very limited at Goodfin, which again is a learning that we've had over the years. Typically, one Zoom is enough. Sometimes a customer will want to meet me. They'll want to make sure this is real, this is legit. They'll have a basic set of questions, but because they pretty much apply across our private markets investment products, unless there's really a need particular to a deal or a particular set of circumstances for the user, like one Zoom is often enough, or meeting at an event that we host or something like that. Most of our users have a reference or a referral, kind of word of mouth from somebody
part of the
they
community
trust
notion
anyway. So
Right.
I think that helps a lot. Like, we are asking for their money. It is a high trust product. So usually by the time they're coming to Goodfin, they are pretty high intent. They already have one or more touch points. And then many times they don't even need to speak to anyone. And sometimes they do, and it'll take,
it's minimal.
it is really minimal.
Right.
And
but
that
it's
has been
it's up to them.
surprising.
It's up to them how much or how little.
Them.
Right.
Up to
But
them.
AI seems to be addressing all the needs in a very sophisticated
I will
manner.
say much faster than we anticipated.
Wow.
The usage from our customers has exceeded all of my expectations. And our AI is not perfect yet, right? These are early days. We are learning. We're constantly trying to get feedback. We're careful to say, like, this is we're at the bleeding edge. We're really doing what I said I liked and appreciate about OpenAI by putting it in front of our consumers. Like, JP Morgan won't do that, but we can do that, right? And it's like, we've really pride ourselves on being like bold enough to do that, letting our users use the AI, really making sure it is as accurate as possible, that it is really getting the job done. But to go back to your question about where is it on our platform, so helping you understand the investment product, that was the first thing we did. Second was actually helping you invest, which is a little more complex because that's an action. It's not just a chatbot. It's not just giving you information. It's actually able to take you through the investing flow, which is pretty easy and straightforward anyway, but more
Well,
personalized.
I think that's actually a pretty compelling feature. If you think about traditional wealth managers, I don't think that's up there. They're not there to educate. I mean, maybe they'll talk it through, but they're not showing them the action of it. Seems like
so this is a big deal because I would say that the friction in investing, like we already sort of minimize that as much as possible by building the tech, but the AI on top of that is not only to make it even faster and even more seamless, but really, like, let's say you have a question while you're doing it and you're like, oh, but there's three legal documents here. Like, I don't understand why there's three. You ask that question, the AI will answer, just like if we were doing this together and I was having you fill out the documents. And so imagine being able to do that for each person at scale. That's huge, right? So that's the kind of efficiency unlock. That's the kind of user experience unlock that we're doing. And then there's like the AI onboarding. We've built a research analyst. It's in beta, but we're very excited to roll that out. So that's like your own like little equities analyst.
Feed it something that I'd like you to look into this sector.
It'll generate a report for you.
Wow.
Yeah. So we're rolling that out, and you can customize the report. You can be like focus on competitors or like compare, Google and Perplexity in particular, but you can be, very specific on that, and it will generate, a pretty, very good research report. And then we also have a news agent, and we're integrating more and more sources. But the idea there is like, how when you get onto Google, Gemini will now give you a little summary. Well, the headlines are sort of summarized for you and the companies that you're interested in. And then you can dive deeper and sort of ask follow-up questions with the AI. But the idea is like, look, if you were a high net worth or ultra high net worth client of a private bank, or you had your own family office, you would have a team. Right? Like there's a relationship person who you call and speak to most often. They do a lot of quarterbacking, but there's somebody helping you who is like, actually there's like the whole investment team and the portfolio
research
team. And there's right. And so as we scale this up, we are going to be primarily AI agent built and led with humans, of course, and you need them. And then the humans are building the agents. So of course, like the human element here and guardrails are important, but that ratio is going to be pretty high in terms of agent to human, which makes it super cost effective, makes it much more able to scale. And also I think in line with, you asked if it was younger generations. I think absolutely, not to generalize. And we have plenty of customers who are, who span the spectrum of age, but the world is only going further and further in that direction. And yes, young people tend to be first on that, but I think you're going to see it across the board.
So speaking of young people, say somebody is, they have a big job and they're just kind of figuring out, what do they do now? They know they want to invest. What would be your advice to this young investor, but may be a little unsure of this Goodfin and what it's about?
Good question. So first, I would say if you haven't invested at all, that the best place to start is, with something you understand, feel comfortable with, and really an amount that is like, ideally that you can lose, right? It's not about the amount. I would say getting started is the most important thing, and finding that comfortable place for you to start is most important. Now, usually the recommendation would be in public stocks or in index funds. They're liquid. There's a lot of information out there. There's so many great tools and apps and things that make it so easy. So I would say, the earlier you are in that investing journey, definitely just get started. And there's lots of great sort of easy places to start. Now, if you are at that accredited investor level and you could come onto Goodfin today and start thinking about private markets, I think they're having, again, same principles as like an amount, it can be very small, what you're comfortable losing potentially, right? I would say. But really, you want to be able to understand what you're investing in and feel excited or feel good about it, right? And that has been where we have gotten so much traction, right? With users, many of them do have advisors, many of them have plenty of other investments, but they're excited about the very special opportunities that we have on Goodfin, and we make it really bite-sized and accessible for them if they seek that. We also have people who regularly write six-figure checks. There's a range. But if you wanted to dip your toe in, and this was what I wanted, right? And what I feel like is one of our greatest value props and gives me the most joy from what we do is those like kind of early private markets investors. It's their first time, or they're still kind of like at that point in their lives where they're learning and starting to build that portfolio. And by making it just right for them, they can actually build a portfolio. They don't have to like commit to six figures in one fund or in one investment. You can split it up.
There's a place for everybody to start the journey.
Absolutely. That's our premium membership is perfect for that. If you're a premium member, generally speaking, you have flexibility on minimums and you're able to like really start to build that portfolio with small check sizes, and you'll learn. And then you should utilize our UI. You should come to our events to learn more about.
It's incredible because I know this isn't the core business model, but there is this ancillary value proposition of you're almost like an education play. You know, you're really guiding them on this journey. And I know that the AI native platform plays a critical role in that. And I would think that's, you know.
Absolutely. And that's another great use case and low-hanging fruit of AI, right? AI is really good at summarizing, highlighting, digesting a lot of information, right? So again, as like news updates are happening, as like it's analyzing a bunch of sort of financial reports or disclosures, like AI really shines in being able to distill that in a way, and you can tell it like, take this tone or be more succinct, or I care about this. And it's very, very powerful already in that way. And that's like really good for that educational element.
Yeah. So I was at a conference and I heard you speak, and there were people sitting by me, and I heard this woman say, that company is going to just be massive. They are incredible. I wonder where you see Goodfin in 5 years.
Yeah. So look, we had big dreams, big ambitions. And when I came out of Y Combinator, it was always to be, private wealth or private bank, right? And that is the goal. And, to be as big as we can, to IPO, to be as independent, as we can. Now, to get there, that's a really tall mountain to climb. We have to start somewhere. And I, for many reasons, picked this wedge of private markets, right? Because it's where our user is underallocated. It's a way to get them to come to Goodfin, right? If you have an advisor, if you have investments elsewhere, why would you come to us? You're going to come to us because we give you these special, exciting opportunities, and we have this great high-value community, and we're, not just making your financial life easier, but hopefully enhancing your life as well, right? And that is sort of working. But in order to have these customers investing with us, they're giving us tens of thousands of dollars, hundreds of thousands of dollars. It does go to trust, right? And it does go to building, not just something on the cutting edge, but something really credible. And we're talking about people's money.
Yeah.
And that has always been a primary kind of pillar. That's why we partner with NYU, NYU professor on our research. That's why we care so much about understanding where the research is, what's happening, having discussions with other leaders in the space, because that's so important to what we're building. But once we have the trust of a customer and they're giving us a significant chunk of their money,
they're locked in.
That's the beauty, right? Is that then we can start to build that wealth manager of the future, right? Because then, we're going to apply the same technology and this same ethos of going deep on public market stuff, on financial
I
planning.
think Jamie
on tax,
Dimon might be calling you pretty quickly, if
but
he
that
hasn't
suite
already.
is what we're going after.
Anna, I want to thank you again. This has been an incredible conversation. Really appreciate your time. Tell us a little bit about where anybody who's listening or watching can learn more about Goodfin.
Yeah, thanks, JC. It was so much fun. You can check us out at goodfin.com, and there's links to our social on our website, so Instagram, LinkedIn. And yeah, you can also reach out to me personally anytime. It's anna@goodfin.com. But thanks so much for having me.
Thank you so much.
Really great. Thanks.